Thank you so much for joining us to talk about Real Estate Investment Trust and InvIT. And of course, I'm going to begin with Mr. Barua, who's here from the market regulator talking about this great product. I know the narrative just seems to be about why haven't we seen a single REIT listing, but is that because the market regulator has taken its time to make sure that when we launch, let it be right and let it be perfect?
So one thing I would like to say that it is not that there is no filing for the REIT. So we have received one application for REIT also.
Embassy.
I don't want to say anything. So one already product has come. As far as InvIT, we have received 6 applications. As you know, this is a product the world over. It has taken time to be launched. And in USA, that bill was passed in 1960. But in effect, the product became successful in 1990s. So there is a long gestation period before this product takes place. But we have advantage of leapfrogging in a sense.
You know, Mr. Barua, the market regulator has also been coming out with, if I may say so, a slew of changes. Like almost at every other board meeting, we do see REITs being discussed, it's being made a better product. Are you done? Are you done giving the final touches? For now, at least, you've received one application also.
This is a product which need a lot of structures to be put up.
Before I get to the developer community, on what they make of REITs and the model that exists, a community that is also thirsty for capital. I beg your pardon for saying it. Let's talk to the investor community. Mr. Naren, you're representing the largest mutual fund that we have in the country here. ICICI Mutual Fund has been pretty bearish when it comes to real estate and infrastructure. You're of course managing other people's money, so you have a duty to be more cautious. So when you look at these products like REITs and InvITs, what do you think? Like, are you going to put any money in? What is your reaction? How are you going to compete with it?
We look after other people's money, so we have to look at the risks. And if you look at even the equity issues belonging to real estate infrastructure, many of us participated in 2006-07 and then suffered. So I think it is, whereas if you see there are industries where, like IT, where the industry helped investors make money, and therefore the money could be continuously raised by the IT industry. So I think we will be looking after our interests and our investors' interests, and at this point of time we have to be cautious, given that most road companies could not estimate traffic properly in 2007, 8, 9. So why should I take exceptional risk unless I'm going to get exceptional returns? So I would say it's necessary on the part of the industry issuing, the real estate and infrastructure industry, to leave something on the table for the investors. And if they choose to leave nothing on the table for investors or overvalue them, then I think the industry doesn't grow. So I would look after the...
Mr. Naren, if I were to read between the lines, the sense I would get is that perhaps the bigger players like yourselves, or maybe ICICI Mutual Fund, is going to wait to see the evolution of REITs and InvITs, see how other people perform, how they make money, what kind of returns they make before you decide to jump into the bandwagon.
See, as people who invest in equity of other companies, we always operate on incomplete information. So as long as the incomplete information that we get on it gives us some margin of safety, we invest. That's how we invest in equity. We can't understand everything about every company to invest in equity. So we understand the available information, analyze the available information, see whether the valuation gives us some margin of safety. In that case, we invest other people's money in those instruments. So the same process we will follow. It is not that we won't invest in REIT or InvIT, but we have to invest in the best interests of our investors. So there has to be margin of safety.
Mr. Kampani, what will be an exceptional return? What will be a good return? What will make it worthwhile to list a REIT and an InvIT? So we'll ask the investors and then we'll ask the developers that is it worth it for them to actually list the REIT and the InvIT?
I would like to start by saying that a REIT is a very different product. It's a very balanced product. It's not a product which is like an IPO. And I think it's very important, and it's the collective responsibility of the issuers, the investors, and the investment bankers that this product, first of all, is not missold. So in a REIT, what do you get, right? In short, you're getting some amount of capital appreciation, but you're getting stable income, right? So that is the idea of a REIT. So it's a much more protected structure than a company which is really raising capital for growth, right? A company raising capital for growth through an IPO is obviously a riskier proposition because the growth is higher. So having said that, the returns of a REIT should be somewhere in the longer term, in between the returns of a fixed income product and what an equity product will give you, right? Because you get capital appreciation over time, because 80% of your portfolio at the minimum and ideally 90% are finished assets, which are giving you income, right? So there is no question of a REIT IPO listing at 20 or 30% premium. That is not going to happen, right? This is a very different, balanced security, which will allow a diversification in investors' portfolio to get stable income with long-term capital appreciation.
Mr. Kampani, right now there is, and I'm talking from the retail investor's perspective right now, because you're talking about this collective responsibility of all stakeholders to inform the public about all this and educate the public. Right now, there is a limit, a minimum of 2 lakh rupees as far as retail investors go, and you're saying there should be somewhere in between a fixed product and an IPO. So should this also be, should they be looking at REITs as a long-term strategy and saying that, okay, I need to stay invested in the REIT story for 2 years, 5 years, 7 years? How should they approach it? How is it done globally?
Right, absolutely. So I think what happens is, as we all know, real estate also is a cyclical business, right? So there are times of over-construction. There are times when you have high vacancy in commercial assets, right? So REITs will mimic, stock prices of listed REITs will mimic what's happening in the commercial real estate sector over time. Of course, the ideal situation would be that investors take a very long-term call on owning a REIT, because capital appreciation will not happen immediately. Rentals go up, you have 10 to 20% allowance for building new properties, which give you long-term growth, right? So what happens when a REIT issuance is done, at the beginning, the pricing actually could be even lower than 10-year government bonds, because you will see a flood of international investors who will be willing to buy high-quality REITs, sponsors with a good track record of corporate governance, and assets which are backed by some of the best companies and multinational companies in terms of leasing. So if that is the case, you will see a flood of international money that will want to buy these at lower than government bond yields, because they are willing to pay on a present value basis some part of the capital appreciation they are going to receive.
Vishal Kampani, you just spoke about how investors will chase developers with a track record, etc. So we have 2 developers here who have been chased by some of the largest foreign investors. So you have Brookfield, which has announced the largest deal, commercial deal with Hiranandani, and of course you have Qatar and RMZ that have joined hands in the past. If I can now come to the 2 developers, Mr. Hiranandani, I'm going to begin with you. We just heard that announcement of Brookfield as well as your company. In fact, I had the good fortune of interviewing the global chief of Brookfield in Toronto last week, and he's very, very bullish in India. So what I want to ask you is that you're doing new things, like a $1 billion deal, which we didn't hear something from you in the past, obviously. Would you also consider a REIT listing the way the product is at the moment?
First of all, we have to compliment SEBI for the creating an institutional framework second to none in the world to secure the persons who are actually going to invest into the product. We are extremely grateful to them, because we want a stable product which is listed and that takes the care which Mr. Kampani just mentioned of how the investments would take place. And I think it answers ICICI's issue of the risk portfolio that you do. And I would say that it is much more secure than even the bond market, for the simple reason that it is asset-backed, directly linked and secured. And there's a trustee which has been appointed to take care of that back-end security. So I think to the extent to which that we are talking today, I am certain, in spite of whatever you have said, you will be one of the first investors into the REIT market. I wouldn't say the same thing about the InvITs in view of the insecurity in terms of infrastructure which has happened in the last 10 years. But hopefully it will change in the next 10 years, and you will also look at that very proactively. My reading is personally, if handled well by the persons who carry out this issuance, this will be the best investment that India could have created and real estate could have been created, provided, of course, we handle it well. Exactly. So I'm not really in a
How
hurry.
can it be handled well? What are your apprehensions there?
My apprehensions is the persons who are issuers take necessary care to put it, as Vishal said, and again they mentioned, put something on the table in order to take care that the pricing strategy is right. On the other hand, I'm looking at it the other way. I feel that whatever you may price it at, the international investor will price it higher, because they are more bullish about India than all the people sitting here
That's
on the
true,
table.
yeah.
So they are more happy with the Indian investor in investment market than I can see anywhere in the world. And that is why you have investors from all over the world coming over here, because they believe in India, which Mr.
So that's
Modi
a very real fear. The foreign
It's-
investors might come and actually price it too high.
No, not really in that sense of the term. That the investments from their side coming in will be much more stronger. So the opportunity of putting these investments into the market will, in the Indian scenario, will be much higher. But I'm actually happy that it's taking time, and we are not rushing it to the marketplace, because having made one or two big mistakes, we will never be forgiven. Something which happened in Hong Kong. So I am happy that it's being secured. SEBI is playing a fantastic role. The investors are also very cautious about the whole thing. I'm very happy to hear that
I
also.
like how Mr. Hiranandani looks at Mr. Naren and tells him also real estate is better, and he's probably hinting that it's better than power, it's better than steel.
But I can bet any money you want on the table that he will be one of the first persons who will put in money over here, because it's such a good investment
Are you accepting
segment.
that wager, Mr.
So
Naren?
we can lay a small bet on that on
Are you
this table
accepting the
over here
wager?
today.
If there's good margin of safety for our investors, that
Yes.
clearly we look at it. Why
Yes,
not?
of course. In the REIT market, I can guarantee you that. But
But put your money on the table, gentlemen. What are you betting? Come on. If you're having this
10,000
wager-
bucks that he will invest within 6 months of it being issued.
Bet other people's money.
No, it's just a bet between us.
We have Harsh Shah here from Sterlite Power, which has actually applied to SEBI to want to list an InvIT. So can you share your experience with us on why you decided to list an InvIT, and are you finding it challenging, all the issues that have been raised as far as pricing goes and how to get it right?
Thanks. I think I'm only infra guy within the real estate.
You better hope they don't have a bet on whether yours
yeah.
is going to flop or be a hit.
No, that's fine. So I think first, again, I would like to start answering the first question you asked to Mr. Barua. This is the fastest product launch for InvIT or REIT anywhere in the world. So while we've been a little impatient like Indians are, but SEBI has put in good amount of care in developing this, and we think it is at a level where it can be launched. So I think now it's just the time which it takes, like in any other IPO, is the process. So SEBI has done the role. Coming to some of the investor concerns and then coming to real estate versus infrastructure. At the end of the day, this investment is a professional investment, and it's not wise to classify all infra assets into one bucket. In one asset, you take toll road risk, an under construction toll road risk, people lost money, and that's primarily the reason that InvIT are developed, that you do not take such risk, under construction risk you do not take, and therefore the experience of the past doesn't repeat. That's one of the reasons why this product is developed. Within infrastructure plays, there are toll road risks, there are annuity projects, there are several projects. Each of the projects has a different risk profile. And therefore, it's not wise to club them into one bucket per se.
But why did you decide to listen InvIT? Can you share that experience
Exactly.
with everyone here? Because it is a new product.
Fundamentally, we believe the story that infrastructure or real estate, there needs to be availability of risk to investors which they are capable to take. What we had in India till now is an equity market in which there is a mix of operating projects and under construction projects, and investors eventually end up taking both the risks. Either they are successful with great amount of returns, or they are miserable with a huge risk materializing. This product gives us opportunity to segregate the two and put in the right capital at the right location. So in an operating project with a 35, 40-year cash flows, that requires the cheapest cost of capital because that's the safest investment you can have. You don't have a 35-year bond today in India to invest, or you don't have any security going that long, which gives you that visibility. And therefore, that's the cheapest source of capital and the best asset to invest that.
Raj Menda, is that what real estate developers also think? You know, for example, you have a tie-up with a sovereign fund. Why should you look at a REIT when, you know, like Mr. Hiranandani spoke about, you have a slew of foreign investors wanting to invest in the India growth story? Why should you do this when you can actually maybe just do a PE deal or, you know, a simple deal like that?
Okay, simply putting it, I think I would distinguish the three types of investors you spoke about too. One is simply the long-term, long-play pension funds and the sovereign funds which want to invest in real estate on the long play. And the other ones are simply the hedge funds in the guise of investors who need a secured exit in the fastest point of time. So as an organization, we prefer to work with the long term because real estate is a long play. And as long as they see a bright future, they are happy to invest more and more. So the question which you have, and the third investor is of course the retail investor and the institutional investor who are doing it as a comparative to other type of investment vehicles available. But as for your question is concerned, why does an organization like ourselves look at doing a REIT? It simply creates the currency of trade. So in case when we need to expand our portfolio to take on more assets under the fold, we simply issue the REIT stock to them and take on the assets of the other developers because it is well priced. It's regulated by the market itself as to what it should be. So it's easy to expand the portfolio, and that's what we look at because currently all the investors, including ourselves, as far our company is concerned, are not keen to divest any positions, but need the currency simply to grow the portfolio, which is very easy to trade in. So the moment you can strike a deal, you actually can take on the asset right in a matter of few weeks.
Abhishek Goenka, would tax efficiency be perhaps another reason to go in for a REIT listing?
I think it's definitely a factor, and again, to add to all the panelists, I would also compliment not just SEBI but the Ministry of Finance for the swiftness in which they've responded to the requests for the, for want of a better word, tax concessions. But I think the important point is the government has really mirrored the fundamental concept of direct ownership, right? So I think rather than looking at it as concessions, we need to look at it as a model where there's a complete pass-through now, and there's only one level of tax as though the investor directly owns the real estate or infra asset, whatever the case may be. And again, I think the way it's been done, particularly for non-resident or foreign investors, a complete pass-through, just a 5% withholding even on interest. I mean, this is really as good as it gets. Again, the government, rather than doing it in bits and pieces and incrementally, they've just gone the whole hog. So I certainly think tax will play a factor, and clearly it will add to the attractiveness of the product.
So Saraf, would you agree? When do you think somebody should go in for a REIT? And when should someone not just list a REIT, but when should someone invest in a REIT? You have to have liquidity in the system too.
Well, I think REITs has come at a time when investor confidence, and if I may use the term retail investor confidence, is at its lowest as far as real estate is concerned. So in my opinion, the dynamics of this entire instrument would operate from the perspective of restoring that confidence. Because here what you are talking about is that there is going to be a recurrent return which is going to come by, and there would be a minor appreciation as well. And so it would be in some sense treated as a very, very secured and highly regulated investment. Unlike the earlier perception what people had with respect to real estate investments. So in view of this kind of a scenario, I think the investments would come by and people would be interested in supporting a REIT listing. Not just mutual funds and institutional investors, but even retail investors. And we have to also realize that this retail investor in some form has even deserted the stock exchanges.
Mr. Barua, are you going to go out of the way as the market regulator to ensure that there is retail participation? We haven't really seen that in the recent IPOs. They've been very, very successful, but it's also been on the back of the QIBs, the anchor investors that have come in, where you've also seen a huge premium at the time of listing. So do you think the market regulator will have to do a lot more to ensure retail investors also participate in the REIT story?
As you know, in the regulation itself, there is two restrictions are there, especially as far as the REIT is concerned. The ticket size is 2 lakh rupees, and the for trading lot is 1 lakh rupees. So to begin with, because it is, we will first would like to see the HNI and other comes, and then after it the product has stabilized, then it can be offered to the retail.
Yes, Naren, since you are investing on other people's behalf, do you think there is liquidity, the timing is right for such products? Because, you know, private investment still has not picked up. We're riding a lot on FDI, on the government's public expenditure, etc. Corporate earnings have not really picked up. Let's see what the new quarter will be like, the result season. So you think the timing is right?
Absolutely. Thanks to the good regulation done by SEBI, the low interest rates today, globally zero interest rates, the fact that equity market and debt markets have delivered returns, the timing is absolutely perfect now compared to 4-5 years back when interest rates were much higher. People were looking at, look at the NCD issues done by a few companies in the last 3 months, the kind of response that they got. I don't think anyone would have predicted that response 3 months back. So I think the timing of REITs and InvITs is absolutely perfect.
So what I'm going to do is, since all of you have the opportunity to be sharing a dais with the market regulator, very quickly, one by one, your suggestions to him on how to make REITs and InvITs better as either to list it or to invest in, so that we have all the stakeholders having something that they can share with the market regulator. Abhishek, we'll begin with you.
So my request would be that bring the InvIT and REIT regulations at par when it comes to the private offering rather than a public offering being made compulsory for REITs.
My suggestion would be that if you could consider reducing the threshold investment limits a bit so that we have some backup in form of availing that last mile of retail investment.
I have, sir, 2 suggestions. One is listing on the equity segment, not on the fixed income segment. And a second suggestion is, sir, this taxability. For long-term capital gains tax, there is a 3-year. I think we should make that 1 year at par with equity, sir, if you can recommend.
Sir, I think you've covered almost everything except that the states have still not done the stamp duty bit. So I think equivalent to mortgage is something which you could recommend the states so that would help all the transfers of properties to take place at reasonable rates.
So, like it's done in the Invest REIT, I think we're requesting the regulator to allow for what is called a private listing in the commercial real estate also. I've had a chance to speak to him earlier, and Anant was hesitant to permit the same because real estate doesn't have the same great image, unfortunately, as the infrastructure for now. But hopefully, we will be able to convince them soon that to allow a private REIT listing for commercial real estate also.
So I have just one suggestion to help us build understanding of the product in India with specific regulators like EDA, PFRDA, and several others, including, it's not regular mutual funds, it's the equity listing, debt listing, or both have a flexibility of investment from both because it's not an equity product, it's not a debt product. So how does a fund manager choose? So I think the Indian investors, which is insurance, mutual fund, the large controllers of capital, are yet behind the curve in understanding the product as well as having approval from their regulators. So,
on InvIT, how the assets are sold from the company to the SPV, at what pricing, more details have to be provided in the document because we are finding it difficult to understand whether the sale is happening at a reasonable price or at a much higher price.
Thank you so much for joining us here. Next year, we'll come back to see who won the bet, Mr. Naren or Mr. Hiranandani. So that's going to be fun in a year's time. But thank you so much for joining us for this discussion.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.